Today we're going to talk about building consistency into your trading. Stay tuned, traders. We'll be right back. Good day, traders. I'm Stacey Burke from Stacey Burke Trading. It's been a hugely volatile week for some of the pound crosses this week. Today we're going to go over and review some of the things that have come up in the questions from a lot of the people who are watching the videos. And I appreciate the emails, the feedback, the comments, all of that, the questions. We're all on this journey together, and my objective is, I've spent thousands and thousands of hours at the screen. My goal with these videos is to share with you a lot of things that are hidden traps, unseen potholes, all the little hurdles that you're going to encounter that aren't in the textbooks, that happen in live time, and hopefully it's going to help you, and if it hasn't been helping you already, at least help you get to the next level in your own trading results and developing consistency. So just to review, we've talked about having a really simple system. We talk about working from the high and the low of the day, the high and the low of the week. We've talked about focusing around the market equity opens, the importance of that. We're going to go a little bit in depth around that today, and then we're going to talk about the numbers, and we also talk about the 12 candle rule. So the whole object with all of that is that to keep it simple. And now if you've been following these videos and you're looking at your charts, you can pretty much identify that every single day there's a strong move coming into the London Open. Sometimes it'll occur at the end of the Asian market Europe changeover in that early part of the 12 candles. Other times, depending on where we're at in that high-low of the week, it may come later in that 12 candle window towards the end of that third hour. But again, we're going to talk about some of the entry criteria today. I'm going to go through some screen examples of the type of candle patterns and at the numbers and at the timings of what those trades look like. But again, the whole idea is to keep it simple.
Just reviewing some of the candle formations that we look for at the session changeovers, and later we're going to also, in a different video, talk about the 7 o'clock stop hunt. But high of the week setups, this particular type of setup where the market explodes out through the high or through the low of the Monday or Tuesday at the high or low of the week, taking out the previous week's high or low. This is typical for a peak formation heading into Monday, Tuesday. We're going to talk about initial balance later, the Monday, Tuesday, Wednesday cycle. But what I want you to grasp out of this the most is that the candles came strongly outside of the range, pulled back, and then we call this flipping the book. We have a pin bar inside where traders would have been caught long chasing that move out of the box, and then the pin has reversed and gone on top at the end of the hour. That's the last candle of the hour and closed as a bear hammer heading into the London Open at double zeros. We'll see more of these in some other examples. The other type of pattern that we'll look for is an engulfment pattern where a bull candle will be engulfed by a bear candle for a short, and the same happens for longs where a bear candle, a bear doji, will be engulfed by a bull candle when we're looking for longs. We'll see pins often at the low or high of the day, pin hammer, and again engulfments when the market has moved 50 pips. The types of patterns to see in Asia are the market coming from a close in the US and auctioning down to stop hunt, forming a larger W type pattern. These are things to look for in Asia. We're going to see another example of this week. This is the week we're currently in, but there's another example that just happened Thursday, Friday night. So again, session changeover, a pin hammer, similar to what we saw in the New York reversal, off numbers, extended out. This is into a peak formation, high of the week. Heading into the next day, a pin hammer off of numbers after the market has moved up 1, 2, 3 levels of rise to the high of a 50 pip box at numbers, and then an engulfment off the numbers. These are why some of these trades, you'll see them enough times, eventually you'll start to look for these setups, and you'll start just thinking in terms of how much has the market risen from a high or a low. Is it working the high, working the high, working the high? What do I expect to see as it comes out? If it comes out of the top of the range, what am I looking for? If it comes down to the bottom of the range after a move like this, what would I look for? But this is a engulfment with a tail at the session changeover. New York Open, engulfment after a tail on the right side. The market also, we will just show you something. Traders who are short on this bear hammer heading into the New York Open after the stop hunt, you'll see when this market shifts and goes sideways, these traders are all trapped down low. And again, we see an engulfment early in Asia this morning. Another concept we're going to talk about in a later video, why it's so important to learn to take profits. The market came back this morning and moved aggressively in the opposite direction, trapping traders who potentially may have lifted their stops, not used stops, not even taking profits off if you were up here or in here somewhere. Very important to learn to take a profit. But the main concept I want you to get out of the simple setups is engulfments, pin hammers, peak formations, again engulfments, pin hammers, dojis, pin hammers off the lows, and engulfments and peak formations.
If it's simple, you can reproduce that. It's very low stress when you have something that you can just focus on executing, and you've got 6 pairs and you know that there's going to be 1 or 2 of them that give you one of these textbook setups. Probably ideally at least once a day, if not twice in the US session also. But it's really important in terms of consistency to think about 2 things. Not trying to trade every move in the market, but identifying, and we're going to talk about building your playbook, but identifying a couple of simple trade setups that you resonate with best, and then learning how to identify and execute them better, and understanding the high and the low of the week in terms of when we can possibly skew out our profit to risk ratio. And then also the number one thing that's critical to you maintaining your mental psychology, your mental capital, as well as your financial capital, is to manage your risk. If you've been watching these pairs the last few weeks, you realize the importance of having your losses cut as quickly as possible. If you're wrong and you're caught up high or you're caught down low in the wrong direction, how you could be in a measured move. And as Mark Douglas talks about, as we've seen, it's Friday morning, we saw a 200 pip move down yesterday, and they've already moved it up 250 pips in the first couple hours of Asia. So anything is possible in these pairs, and this is where we're going to talk about the playbook again, because there are some really simple key setups that we're going to go through in the screenshots that I'll show you show up again and again and again, which this morning is an example of one. Number 3, as we talked about, anything is possible. And the big thing about identifying and not worried about trying to trade every day and get pips, it's more about identifying your best trade setups which show up frequently enough that you can learn to trade them really well, identify them and execute them flawlessly, but then being confident and developing the skills in live time, not just knowing and seeing your playbook setups, but identifying that in live time and scaling that up gradually as you're seeing those results in terms of your execution, your profit taking, your loss cutting, all of those things, and learning how to trade them bigger and bigger and bigger. Because if you're starting to trade big enough, you don't need to be trading all the time, and you can identify and trade a couple of simple setups, maybe if you're big enough, once or twice a month. Number 4, one of the pieces of homework I'm going to give you over the weekend is to study the weekly templates, to print off a Monday to Friday charts. You can use the hourly 15-minute charts, it doesn't matter, but start to build your part of your playbook identifying up templates, down templates, range-bound templates, and then when you see these evolving over the course of the week in live time, you recognize when these templates, that you might be in an up template and you might potentially be looking at what, as we saw yesterday and what we talked about in the last video, the straightaway trades that when they come on underneath of a peak formation and there's a consolidation, the profit opportunities that are there, but also again being able to recognize and trade them in live time. And that's the real big shift, is knowing a lot about the markets, but then when you're in live time, all the little tricks that they will do to you when they're manipulating the market around certain key levels. I noticed last night, right at the low of the session heading into New York, we were at the low of the day. They widened the spread almost 15 pips at one point to make people who were trying to buy the low of the day pay a lot more, and people who are trying to get out at taking profit at the low, they barely went to the low price. So they widened the spreads enough that it made it difficult for somebody to buy low, and it made it difficult for somebody who was short to get out with the profit at the executing of the low price of the session. And we're going to talk about building your playbook of your best trade setups. This is really important because you're going to see certain setups over and over and over again, and I'm going to go through some examples today. But it's really important that you build those yourself so that you can visually identify with them, but also break that down into its components about how that particular setup may have evolved, how it perhaps worked in terms of the timings and the numbers, how did it evolve into where you would have executed it and in that 12 candle window, and again, recognizing that in live time. What do you need to do to change in terms of if you're not happy with where you're at with your results or your behaviors or certain things? And you know, for a lot of the things that I just keep chunking away, we talk about this in the 7-step daily routine for high performance traders. If you haven't got it, go to my homepage and download it. It's a free audio file. Build your own blueprint for a routine that's going to change you into not only the trader that you want to become, but if there's other things that you need to work on, maybe you've got some other personal goals or personal things that you want to improve, your health, your relationships, your social time, your recreational time, whatever those things are. It's important that one of the biggest things that I believe in is that you need to make your trading day, whatever your perfect day is for trading. For me, because trading here is in the afternoon and in the evening, the bulk of my morning, you know, I usually get up, I work out early. I treat everything the same as if I was going to an office for 8 o'clock. I get up, I work out early. I used to take the dogs out, as you know, but unfortunately we've had to put both of them down. I'll go down to the beach, sometimes do a beach run and a swim with one of my sons. And depending on which day it is, I might go for a ride as well. But I tend to do my physical activity in the morning. I like to work out every day. I like to usually not eat until midday. I just feel better. I have clearer thoughts. I go through my charts after I've done my workout. I like to have a coffee in the morning. I've got my routine, which I refer to as my perfect day. I like to go to the screen being in a great headspace. I listen to an audio meditation for about 15 minutes. I close my eyes in the afternoon before I go to the screen. But I try to make everything the way that I want my life to be. And that's something that you can do for yourself as well. What do you need to stop doing? You know, for me, okay, do I get in too early? Do I take too much leverage on trade setups that aren't my best trade setups? You know, if you're not using stops, again, you want peace of mind in your trading, use stops. Whatever it is, are you chasing trades? Are you taking, you know, piker trades that aren't even in your trade setup because it looks good? All the things that can eventually cause you to lose focus on the simple main trade that you're supposed to be focusing on, because this little piker trade or something that you've done all of a sudden starts to balloon out, and now it's occupying your mental focus, and again preventing you from doing what you're supposed to be doing, and that's executing your simple trading system, however that is for you. You know, managing your risk, having an asymmetrical profit target. One of the things I do as soon as I get into a trade is my automatic maximum stop loss is 18 to 20 pips depending on the pair, and I automatically put a 50 pip target in minimum straight away. Then I will revisit the trade right away to look at it in a bigger context if I haven't already done that, just to reassess if I've saw something different, if I was looking at it from the opposite perspective, but also reassessing where we're at in that weekly template. Should I extend my profit target out? Did I make a mistake? If I'm in the wrong trade, just hypothetically, if I've read something wrong or I've timed something wrong, most of these trades when you're right. So the next part of this is practice. Practice, practice, practice. Identify the simple patterns. I'm going to give you some examples today of what you can review for yourself, whatever those setups are. But practice them. Understand the different variations that you could come across. Even for the same setup, you're going to get different variations of it. Practice that. Recognize the subtle changes or the subtleties that they throw at you in terms of how they manipulate that around. Know that when you're in live time, how am I going to recognize that? Do I need to set alerts? Do I need to use certain criteria to bring that to my attention? Do I need to set a number alert? Do I need to set a timing alert? You know, I got the 12 candle window. That's for a reason, because if you've been following me the last few weeks, you know specifically that every single day there's been a move in that first 12 candles from the Asia close onwards. So it's going to happen next week. It's going to happen the week after. They usually come off numbers, and it usually offers us risk reward 3, 4, 5 to 1. So practice that. Repeat. Scale it up, repeat. So if you can go through your process, you know exactly what you've done, you've built your playbook, you know your trade setups, you know the ones you think you can trade the best, that you resonate with the best. Focus on completely flawlessly executing that process. Don't focus on the pips or the money or anything else. Focus on mastering your setups. Focus on executing those trades flawlessly. Review that process. Review your results. Review what you did well. What did you do well? What could you have done better? You know, did you chase something because you saw it after and you got in, you chased it, you didn't use your stop, or you lifted your stop, or your stop was too big, or you took too much leverage? If you did things well, what did you do well? Did you execute well? You identified the trade well, you set your alerts, you had your levels drawn, you saw the numbers, you saw the pattern, whatever it was. Identify those things and keep doing them. You understand that it's not about trading every single move in the market. Like literally, you know, a 50 pip trade once a month, if you're trading it big enough, can be a lot of money. There's 50 pips every session. And they're going to keep moving the market. That's how they make money. They need to move the markets. So there's going to be, you know, 50 pips in London, 50 pips in New York most days, if not more. If you study the weekly templates, you understand that sometimes towards the end of the week, you're going to get a great opportunity if you're patient and you don't do anything stupid in the early part of the week to affect your psyche, to interfere with you being at your best at the end of the week. So when you do that, you understand you can scale it up. These trades are going to keep happening every week. Where do you want to be in 60 days, 90 days, a year, 2 years, 3 years, 4 years? Set some goals for yourself. What is it that you really want? What's your perfect trading day? Stop doing the things that are interfering with you getting what you want. And then what you're doing well, keep doing it and keep doing it better. So hopefully you got some value out of today's video, traders. We're going to go through some examples now, some of the different setups, the candle formations, the weekly templates, and some of my favorite best trade playbook setups. So keep getting better, stay focused, stay disciplined. A 1% improvement every single week is a massive improvement in 12 months' time. Have a great trading week, and may the markets go with you.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.